Cathie Wood, CEO of ARK Invest, is a well-known supporter of disruptive technologies. She has also been very vocal about her belief that legacy automakers are in trouble. In short, she thinks that Ford, GM, and other legacy automakers are facing an existential threat that could bankrupt them and send Tesla stocks to unbelievable heights. Tony Stark and Elon Musk agreed that if you like this kind of movie, hit the like button and subscribe, as the investment manager said, what Cathie Wood said to Barron's. In the next 5 to 10 years, it will be very hard for GM and Ford to manage. Cathie Wood is a famous and highly valued money manager who is bullish on Tesla. She has made a shocking prediction about GM and Ford. She thinks that it will be very hard for these companies to stay in business in the next 5 to 10 years. In her opinion, they will either merge with another company or go out of business altogether. Wood thinks that Tesla could get a big piece of the auto market in the next 5 years if it succeeds in making self-driving cars. He thinks that a share of Tesla stock will be worth $1,000 by 2025. David Winston, a Morningstar expert, thinks that GM is a good company and that its stock is worth 68. The quality and style of General Motors cars are the best they've been in decades. From what he wrote last month, we can tell that GM is starting to understand that it needs to match its size with a competitive lineup in all areas and a much smaller cost base. Well-known stock picker Cathie Wood is in charge of ARK in medicine. They recently made an unexpected move by buying 158000 shares from GM for their autonomous technology and robotics RQ fund. This is a big change in how they feel about legacy automakers because she has previously been critical of them. The specifics of the deal were laid out in the report that showed the company's most recent trades last month in an exclusive chat with Yahoo Finance. The founder and CEO of ARK Invest said that her team recently met with General Motors CEO Maria Benz to talk about the company's plans for electric vehicles. During a chat with Julie Hyman from Yahoo Finance, she also said that ARK was thinking about investing in GM and would keep an open mind about it. Cathie would stress how important it is to keep an open mind and celebrate your wins. She told them that ARK Invest is still learning more about General Motors and is not ruling out investing in the company. Wood was interested in how Mary Barra is turning around GM and focused on cruise automation in January when Ford and GM stocks were going up after they announced plans to make electric cars. In a past talk with Barron's, Wood criticized their rallies and said that electric cars would not make up a big enough part of their sales. Cathie Wood said that she thought GM and Ford might go out of business because she didn't think they had the right DNA to do well in the electric car space. In a recent interview with Yahoo Finance Live, a Tesla supporter says that the company's recent price cuts will not hurt its brand. Instead, she says they may make it harder for other automakers to catch up. The founder of ARK Invest said that standard automakers would have a hard time matching Tesla's price drops, which are caused by its low costs and battery technology. Cathie Wood says that the Woods ARK Innovation ETF-RK still has the most shares in Tesla. Tesla's recent price cuts won't hurt the brand, but they could make it harder for other car companies to catch up. In a live chat with Yahoo Finance, Wood said that the price cuts were necessary to Tesla lost its lead in battery technology, which led to cuts. She also thinks that automakers need to use this battery technology to keep up with Tesla's falling prices without losing money. Economies of scale can help Tesla in several ways. First, as the company makes more electric vehicles, it can spread its fixed costs like research and development, marketing, and overhead costs over a larger number of units, lowering its per unit costs. This means that as the company makes more units, it becomes more cost-effective and its profit margins improve. Second, as the company makes more units, it can negotiate better deals with suppliers of raw materials, parts, and components, which can also lower its per unit costs. Finally, economies of scale can help Tesla gain a competitive edge in the market. As the company makes more electric vehicles, it can lower its prices to attract more customers, which can help it gain market share. As Tesla makes more cars, it can also put more money into research and development to make its goods better and come up with new technologies. This will make it even more competitive. GM or Ford are better examples. These companies will only make a certain amount of electric cars, so they won't be able to take advantage of economies of scale. Overall, economies of scale are a skill for Cathie Wood can help Tesla cut costs, work more efficiently, and become more competitive. Advantage that can help you make more money and grow your business over time. Tesla recently lowered the prices of its Model 3 base model and Model 3 performance variant by $3,000 and $9,000 respectively. The Model Y long-range model's price dropped by $13,000 to $52,990, and the performance model's throttle's price dropped to $56,990, and the performance model's price dropped to $56,990. Ford cut its prices to better compete with Tesla, but GM CFO Paul Jacobson has no plans to do the same for EVs. The cost of Tesla, Elon Musk said in the company's most recent earnings call that price cuts have led to higher demand and wins in market share. However, there are some Wall Street professionals who don't think this is a good sign for Tesla. They think that the price should go up. According to John Murphy, an expert at Bank of America, cuts may hurt the company's image in the long run and make it harder to make money on the side. If you remember what Elon Musk said on the fourth quarter earnings call, that his demand is 2 times his supply, you wouldn't want to lower your prices because you wouldn't get any more additional volume in the short term. Cathie would. During the Morningstar investment meeting on Wednesday, Tessa Bull, CEO of ARK Invest, said that her company would sell its shares in the electric car maker at a certain price. Wood said that ARK will start selling its shares if the price of Tesla stock hits $1,000 in the next year. This cost based on a Monte Carlo study. ARK set the target price for Tesla stock in March. This is the price the company thinks the stock will be worth in 2025. The cost ARK's belief that Tesla's product line would grow and production skills would improve as the company built more gigafactories helped Target reach its goal. The governor of Nuevo Leon, Mexico, said that Tesla recently announced plans to build a new gigafactory there. The electric vehicle manufacturer is about to get its final building permits for a factory near the U.S.-Mexico border, which means that Tesla may start making its first cars in Mexico next year. In an interview, Governor Samuel Garcia said that Tesla is just waiting for the final permits and can start making cars. The first Tesla cars could be made in Mexico next year if everything goes as planned. This was said by the governor in an interview, who said that the final permits for building the factory were almost ready to be received. He also said that he thought the first vehicles would be rated by 2024. Elon Musk announced the investment in Mexico last week, saying that the next gigafactory will be built there to make a next-generation vehicle. The factory will be the biggest place in the world to make electric cars, and the investment is worth $5 billion. Since Tesla hasn't said anything about when the cars will be made, let's go over what we know so far. One of the main reasons Wood thinks legacy automakers are in trouble is that they have been slow to adopt new technologies. For example, they have been hesitant to invest in electric vehicles, EVs, and have instead continued to focus on gas-powered cars. As a result, they are falling behind companies like Tesla that have put a lot of money into EV technology and are now able to make high-quality, affordable EVs. Legacy automakers are also thought to be in trouble because there are more new companies in the market competing with them. Tesla, Rivian, and Lucid Motors are all focused on making electric vehicles, EVs, and have been able to get a lot of investment. On the other hand, traditional car companies have been having a hard time getting investors, and as a result, their market share is going down. Finally, Wood thinks that legacy automakers are facing big problems with regulations. As a result of tighter emissions rules being put in place by governments around the world, it will become harder for car companies to keep making gas-powered cars. Regulators also want more money to be put into EVs, which will put even more pressure on legacy automakers that have been slow to make the switch. While legacy automakers have been in charge of the car business for over 100 years, Cathie would think they're facing an existential threat because many of them are likely to go bankrupt if they can't quickly adapt to new technologies and changing regulations, leaving Tesla with a $1,000 price tag. Goal: if you like this video, please hit the like button and follow. See you in the next video.